Good morning, everybody. Hey, glad to be back with you this morning. Yesterday was looked like a great day on Wall Street. We'll talk about that and more when Dave joins us here in just a few seconds. So before we do that, let's not forget that in this world we live in, there are so many things that are out of our control. However, you can take control of your investment portfolio by knowing the amount of risk you have in that portfolio versus the amount of risk you should have based on your current age and how close you are to retirement. Hey, that's why I developed the core retirement design. Give me a call at 863-382-0037 to schedule your core retirement analysis. Hey, with that, we got Dave coming up next.
105.7 Light FM. Morning, all. I've got 59 degrees here in Sebring. There's some sunshine happening, and we might not even hit 80 today. Almost feels like winter, doesn't it? Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. And that financial advisor we'd recommend would be Phillip Statler from Statler Financial Services in downtown Sebring, who is on the phone right now. Phillip, good morning. Good to have you back. How you doing?
Hey, good morning, Dave. Doing well today. It is, I'm enjoying this little bit of fall weather that we seem to have in the air today.
Oh, yeah. Mongo the cat insisted upon going out first thing this morning. I opened up the patio door and went, woo! Maybe I'll just leave the dang thing open. It was kind of nice this morning, wasn't it?
Yeah, it
That,
really was. And I got a little head start on it because I was up in Gainesville. And it was a bit chilly yesterday morning as well.
yeah, put it this way, it felt chilly here yesterday morning. It got down to 69, which really felt cool yesterday morning, but the 50s are just wow, man. Leave it to
Yeah.
Beaver. I like the 50s. Back up to what we're supposed to be talking about today, our friends on the stock market. We had a couple of new records set yesterday. The Dow set another new record. We closed at 43,077.7. New record up 337 points. Standard & Poor's didn't quite make it because they'd retrenched more when they started selling the techs off like chiclets. We'll get to that in a couple of minutes. But still up 27. NASDAQ was up 51 and a half. We're getting dangerously close to record territory there. You'd almost think happy days are there again worldwide the way things are looking so far, right?
Yeah, it was really a barn burner day yesterday when we looked at the earnings. And I got to tell you, Dave, the Russell 2000 didn't want to get left out either. They were up a little over 1.6% yesterday.
And that's got to be getting them darn close to another record as well, because they were only a couple of hundred points away from the record last time I checked.
Yeah, they don't want to be left out. That's for sure.
And we're perfectly happy to see the small stocks do it as well. So it was a great day for yesterday. Even though midweek, while you were out of town, I was having a real giggle out of the tech sell-off. Number one, there was the concern from one of the chip firms over in Europe that reported like a 50% sales drop, and that made everybody else jump. But Tesla, I've got to get the giggle out of. I don't remember whether I told the story per se, but at that big robo-taxi premiere they had last week, they had a
Okay.
fancy pants robot running around selling hors d'oeuvres and chatting people up and whatnot. Found out that the robot wasn't a real robot. It was being remote controlled by some dude in a room elsewhere. Boy, that does good things for your stock when it happens, doesn't it?
Yeah, right. Yeah, exactly.
And the thing is, I was getting into a Facebook argument with somebody a few months ago, and I'd said, well, the Magnificent Seven been driving the market up so much. This is a couple of months ago, and he said, yeah, but they're all Nasdaq, and I said, count it up, 60% of the S&P 500 capitalization are now tech stocks. We got, I think, two of the Magnificent Seven as Dow components, and another three or four that are tech related. So when tech catches cold, NASDAQ being quote unquote the tech heavy index, yeah, it still is, but my gosh, tech can screw up all three of the major indexes now, can't it?
Oh, absolutely. Absolutely, Dave. That's the truth. I mean, they're such a big part of all the indexes that that they definitely affect when they have good days and when they have bad days.
Oh, absolutely. It's not just for NASDAQ anymore, to paraphrase something that somebody was saying about a food item. Getting us back to the morning, now that we had a good day yesterday, I don't think the information coming out of the government data dump is going to ruin that any. Unemployment claims, first-time claims last week, we were expecting 260,000. We got 241, an absolute decrease from last week. Got a report on retail sales for the month of September. 0.4% increase on retail sales. They were only expecting 0.3%. And once you factored out the autos, a 0.5% increase on retail sales. It's really hard to find any black marks on any of these reports, especially given the fact with some layoffs and the dock workers strike for a couple of weeks in there. We were fully expecting to see a spike in unemployment claims last week.
Yeah, we were, Dave. We were expecting some increases there, and retail sales. I got to tell you, that's really a big surprise. Just given the situation when we look at the debt service and credit card debt and that kind of stuff, that they've been able to continue to keep retail sales increasing, and that last month was a good increase.
Absolutely. And you mentioned credit card sales. We're not seeing it hurting the banks very much either. I mean, we've only had one of the big banks that I had earlier on talking about how, their interest rates, that their credit card problems, the write-off information, disappointments on stock reports. Wells was the only one that really didn't keep up with the increase in interest income to offset any potential credit card losses. So the financial sector mostly being in now, I'm saying we've got a relatively bright start to earnings season, wouldn't you?
I think so, Dave. I think that we are so far so good.
Yeah, frankly, I was pleasantly surprised by that because I had some kind of dire sounding predictions for earnings season. Seeing all these beats feels pretty good. One that's not beating, and this is just kind of a sidebar item. Do you remember the COVID vaccine?
Oh yeah, absolutely.
Oh yeah, okay. Well, don't be Novavax, because now that the FDA has put a clinical hold on any candidates for new COVID and flu vaccine candidates, their stock just went to heck in a handbasket because that's pretty much all they've got. They're down 19%. So sometimes over specializing isn't a smart thing, is it?
No, that's not good at all, man. I tell you.
Not in the least. Other tidbits out: the European Central Bank issued their third reference interest rate cut of the year, cut the interest rate of the European Central Bank by 0.25%, another quarter point cut there. That sounds like they're behind the curve, but this is their third quarter point cut this year. So actually, they're a little bit ahead of our Federal Reserve.
Yeah, they are. They started way before us, and now they've surpassed us when it comes to rate cuts. And I'm hoping with all the numbers we're seeing now that maybe we just hold off a little bit before we start cutting any more rates.
Well, given the retail sales, given the unemployment picture, given all the things that we're reading, wouldn't be bad to let this half-point cut bake in another month. I'm not 100% sure they've got the political gonads to do it, but they may very well do that if they're smart. Other things giving indications the consumers are happy. Everybody's talking about how the iPhone 16 sales aren't what they had in mind. Well, between the rumors of new stuff coming out in the spring and what they have got for iPhone 16 sales, Apple managed to get a new record close again yesterday. I don't think NVIDIA is going to threaten them anytime soon.
Well, I guess not. I'll just tell you a little sidebar here. On my way home yesterday, I
Mm-hmm.
thought, well, maybe it's time to upgrade, right? And I stopped in to the Apple store. I have a corporate account, so I want to upgrade. I got to go to a corporate store to upgrade. And I speaking with a lady there, and she says, "Oh, what can I help you with?" And I told her. She said, "Oh, I'm sorry. It's going to be December before you can get the iPhone 16 Pro Max or the iPhone 16 Pro. They're still trying to fill the orders for all the pre-orders coming in. So
Woo.
yeah, it's not, a little customer satisfaction would have been helpful there at that point. But yeah, gotta wait till December, she said.
Good Lord, maybe I was smarter than I thought I was. I did actually pre-order it on the day that it was open for sale, and I've got mine. Nice phone. I don't see any monster difference between the prior model, but upgraded electronics are always a good thing for security. But we keep reading about it. The sales is slower than they expected, and they haven't even filled all the back orders yet. I'm really shocked at that.
Well, I think maybe if I wanted the iPhone 16, not the Pro,
Hmm.
I think I could have walked out with that.
Okay, I got the Pro. It arrived on time and
Get it?
everything, but like I
Okay.
said, I was close to first in line on the pre-order day, and suddenly I
Yeah,
feel like a rocket scientist.
there you go.
I got a new toy and you don't. Given the fact you and I have been comparing notes on apples now for how many years? About 10 years. Finally, I'm out in
Quite
front
a
of you for
while,
a change.
yeah.
Yes. We have earnings season going on, and our big railroad company around here reported. How did CSX do anyway?
They did. CSX was, let me get to the right tab here so that I make sure I tell you the right things at the right time. Okay. So CSX, not as well as expected. They missed by 2 cents a share, came in at 46 cents a share. Revenue was slightly off as well. They were down by 4% earlier this morning. Yeah, if I can get my little thing to now that yeah, it's still down about 4.1% this morning at this point.
Ouch.
So yeah, not not good for them. The other thing we had to report was Alcoa, which usually reports the first week or used to report the first week. Now they're relegated back a week or two, and so they came out and they had a substantial beat for the quarter, Dave. They were expected to earn only 28 cents a share. They actually earned 57 cents a share.
Hmm.
Revenue was a little bit below expectations today, but they're trading up about 1% this morning.
Yowzers. Kind of a relatively quiet day, which is odd at this point in earnings season. I know we got a boatload of them coming in tomorrow morning that we'll be able to talk about, like Netflix after the close tonight. Anything else of import that you see across the ticker so far?
We did have a couple of other things reported. Taiwan Semiconductor, and now
Mm-hmm.
granted they have a version here, but they trade in Taiwan dollars, which is really a big number compared to our numbers. But let me just give you some percentages. They reported a 54% hike in net profits in the third quarter
Hmm.
versus third quarter a year ago. Um, and their annual revenue forecast for the last 3 months was higher. They're seeing a real big demand for their global chips because of the AI applications again. Apple and Nvidia, they use, I guess, some of their chips as their base to then improve on. So kind of interesting to see how well they are doing. They are trading down a little bit this morning, about 1% before we get going. There's one other one that did trade, and this one in our industry is a pretty well-known name, Kinder Morgan. They're
Mm-hmm.
an energy infrastructure company. Um, and they missed by 2 cents a share as well, came in at 25 cents a share, missed on revenue this morning. And so they're trading down about 1.6%.
Wowzers. By the way, I forgot to mention it down the line. Normally, we only pay some attention to those Federal Reserve Office factory gauges that come out, but the Empire State was such a disappointment earlier today. The Philadelphia Fed, I gather, really kicked butt with the Philadelphia Fed's factory gauge, didn't they?
They really did, Dave. They expected it to be a 3. It came in at over 10,
Whoa.
which was definitely going the right direction, and that's a much bigger increase than was expected. The month before, it was 1.7.
Okay. I had to make mention of that. I thought it was important only because the Empire State was such a big disappointment earlier in the week. Not everybody is stinking the place up, and maybe New York was wrong about their gauge. Who knows?
Or maybe
Again,
it's
a
just
good,
New York, right?
well, yeah, New York. Got to remember that also includes New Jersey, which explains a lot.
Yeah, definitely, definitely.
Great day on the markets yesterday, 45 minutes before we opened today. How are we doing, sir?
Dave, right now we are actually, I got to put the right button again. They always move on me. There we go. So right now, Dave, we are actually seeing some significant green ink. The Dow is up almost 0.2%. The S&P 500 is up almost 0.5%. The Nasdaq 100 is a big winner right now, up almost 1% this morning before we get trading. Hey, on the other side of the coin, we've got silver trading down about 0.3%, gold up a little over 0.1%. Crude oil is up 1/3% to $70.65 a barrel.
That's pretty close to where it was yesterday. So the intraday moves pretty much just correct at the beginning of the next day. We're looking at the Asian Rim market. Pretty much it was not a major sell-off, but still a sell-off. The investors in mainland China are saying, whoa, wait, we want more stimulus, and that pretty much dragged everything down on the order of 0.75% to a full percent at the close at 6 a.m. this morning. European markets, on the other hand, generally pretty optimistic. They like that interest rate cut. Overall, European indexes are up the better part of a full percent halfway through their trading day over there. Getting a retirement beat and figuring out what I'm going to do when I retire takes a pair of eyes that I can count on. How do I find you to use your eyes, Philip?
That's why I created the core retirement design to help people design that retirement they always dreamed of. Give us a call at 863-382-0037 to schedule your core retirement analysis. Hey, let me mention this real quick, Dave. We got Shred Day coming up. It is this
Mm-hmm.
Saturday from 10 to 2 at the corner of East Center and Mango Street. That's across the street from the First Baptist Church. Come on out, get your documents shredded out. And then join us this weekend also for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And I'm going to join you down there at Shred Day on Saturday morning and broadcast it live on our country station. So I'll see you then and talk to you tomorrow. Fair enough?
All right, buddy. Have a great day.
Thank you, my friend. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. Hope you'll come out and support us during our Shred Day. Come out, hot dogs, and shred your documents and get some information on identity theft and all that kind of stuff. Look forward to seeing you then. Have a great day. I'll talk to you again tomorrow. Bye now.